Hey traders, it's Steve from the Stock Index Trading Room. Let me get my screen up and I think we're good to go here. I'm going to do a little promo here, a brief introduction and promo to some advanced stuff we're doing in our room. Did this concept yesterday in preparation for this for the room, and the room just loved it. So I'm going to share with you what it looks like, the science behind market expansion. Now, Wednesday, I'm going to go real quick in this. Wednesday on the 9th at 4 o'clock East Coast time in the U.S., we'll teach a little bit, maybe 25 or 30 minutes of some specifics about this idea. So let's make this legal. Please read this and come back and join us. You've seen this slide before. Market action repeats on an ongoing basis. Scale changes, right? Scale changes. We go small, medium, large, but what the market does, the market does. And it's undisputed by master traders, and this is how they became master traders. Well, we identify everything, all of our patterns, all of our concepts, and then we spend more hours than you can imagine before we even bring it in the room, and then we let our members get a feel for it, and they deserve the best, and so do you. Now, the concept I'm going to share can be applied to a specific market entry, and I'll show you what that looks like, or larger market areas for potential turns, and I'll show you what that looks like. So whether you'd like to scalp your way up to a target or to get in and give it room to run, this idea can make a huge difference in your trading. Malcolm Gladwell, in his brilliant book, The Tipping Point, says there are 4 or 5, if you want to get real precise, groups of mass human participation, and the market's made up of mass humans, a mass amount of humans. So this applies, and I think as you look through this, you'll go, holy smoke. We've been looking at it all along. Innovators. These are pioneers. They get the arrows. They have the largest, typically have the largest accounts to work with. And people that are trying to trade this way that don't know how and don't have large accounts won't have them for very long. They suffer some losses. The win percentage is not near as important to these folks as the winning size and account distribution into a moving market. And I'll tell you what that is in a minute. And that's our whole secret, okay? So, but anyway, market's coming down, arguing about price. We'll show you. Y'all know what that looks like. Buyer, sellers, buyer, sellers, buyer, sellers, buyer, sellers, right? And then one side wins, the other side quits, and the market moves. It moves from early adapters and early majority. These traders are waiting on any confirmation that the market's ready to punish the late money into structure. We call or Malcolm Gladwell called them laggards. And we'll show you how we know when this is happening. And the winning side is ready to add aggressively to their winning position. This is where we want in the market. It's where I want in the market, where most of our members have learned to get in the market, is when there's confirmation that one side, 90+% of the time has won and will drive the market a certain way. The other side will quit, maybe even join them. And then this is where we have worked for years to find where this sweet spot in the market is. We can anticipate larger potential moves to work, whether we're scalping or holding. However you want to do it, it's up to you. Late majority, it's still somewhat profitable. It can be a little profitable. But most of the momentum-driven price action movement has ended, and it tends to be slow and choppy. There are a lot of people that like to trade this way if they're trying to trade from their analytical side of their brain, and most traders that struggle are. Okay, so we'll talk in some detail, but we talk in a room all the time about the thought process that's needed to be here and not here. And that's the big shift for winners. Laggards, these traders are always late to the party. The market's abnormal and goes into a 30-point sell-off or blast off, it's not late. But for the most part, most normal market action, they're late to the party. And we love these nice men and women because they supply the wrong-sided orders for us. Okay. An Alan Parsons project song comes to mind. I wouldn't want to be like you. You can use price bars to do this. It gets real sloppy. You can use indicator driven. We'll show you how we use trap trader oscillator. Order flow is the only thing that can cause price to move, and price follows order flow. That's undisputed. We have a secret weapon, trap trader oscillator, that Rob has worked 30 years on. Rob Mitchell, World Cup trading champion. It's fourth generation order flow indicator that has an uncanny ability to predict or forecast the future when it's applied properly. See, in our room, we're constantly looking for order flow driven market entry signals, and these are the one that gets us in front of price most of the time. Now, these signals have been tested, proven. We've traded them for years and years. We have members that have been in the room since the beginning or for quite a while that report thousands of winning trades on some of our signals. Now, they may never work again. Never ever. They may never lose again. We don't know the future, okay? But if human nature, greed and fear doesn't go away, markets are probably going to act more like they did rather than less like they did. Okay, let's look at a chart right quick, and then I'm through. And we'll show you a couple of concepts. One, this is just a market entry system that we're going to expand on. And it's real simple in nature, and it's pretty complex in what it's doing. But as you can see, we get an entry here, an entry here, an entry here, an entry here. And this is yesterday, and it's about an hour, maybe an hour and a half. Looks like it's about an hour and a half. Pretty slow market conditions, and yet this system got some great entries. Okay, and basically what it is, it's congestion of order flow. Trap trader oscillator gets a small box, but the small box is specific because this red dot is sorely misplaced. This red dot, order flow resistance, is sorely misplaced. So when we have order flow resistance that we break through, you can see we tend to go up. We break through down, we tend to go down. And when we have order flow resistance on the wrong side of our panel, not up here, but down here, you can see the market response to that is really good. So that's something that you will want to, yes, you'll want to use if you come to the room. We look for this continuously in the room, okay? Now, the second part, let's look at this. Innovators, early majority, late majority, and laggards, okay? So innovators are, well, we're not too expensive, so we're going to buy it. Yeah, you're too expensive. We're going to sell it, buy it, sell it, buy it, sell it, buy it. Okay. So there's price discussion, valuation discussion in here. Now, all of these boxes that I'm going to show you, we have a specific, exact, specific, not ambiguous, pattern-based read. Okay, so this is not, oh, I look at something and it looks like it might be. That's what 90% of traders do, and in our room, we're 100% different than the 90 traders, okay? So here's what we call a congestion box or an engulfed market pattern, and you can see it breaks out, okay? So the innovators, the laggards are buying this, as it turns out, and after a while, you'll get to where you go, wow, it's just so clear. Okay, but the innovators, buy, sell, buy, sell, buy, sell. Okay, we're going to break down. So what are the innovators going to do? Well, they've got winning positions. They make the majority of their money here and here. They're going to add to the winners. What are the people that were selling? Smart money. Now, butchers, bakers, and candlestick makers are going to buy out of place. We can show you down here why that's out of place. But anyway, innovators here, right? Breakout, early majority, confirmation that we're going down. Late majority is like, oh, it's broken because it's going down. It will always go down forever and ever. Okay, and if the move's big enough, getting in late's okay. But they're going to get in sort of at the tail end of this. And then the laggards are going to come in. It's like, oh, God, it's just, whatever. I can't stand it anymore. Or, I made some profit, small, medium, or large. And, I'm going to give some of it back. That would be a whole lot better than it would be to wait until here and go. Okay. So laggards are going to supply the money. So here we have and this keys off of this edge and this edge. And we'll teach you this. Teach you in a room if you come early. In this retag, let me do it this way. In this retag. So we test, we go up, we're going up, we go down, we're going down. No, you're not. Yes, you are. No, you are. No, no, yes, no, yes, no. Laggards, innovators are in here building a position. So if we break down, they will add to their down winnings. If it breaks up, they'll add to that. They don't care which way it goes. They're not saying, oh, you got to go down or you got to go up. We break out up. Okay. So in a room, we're looking for the first possible smart entry into this that's broken up. Okay. Misplaced TTO dot, order flow lead out, pivot retag into that, which confirms, boom. Okay. And again, so we have innovators, early majority, late majority, and laggards up in here. Okay. All right. That's it. That's all it is. So we're looking. We have turned a lot of traders that I hate congestion, and now it's like it's the only thing they'll. Now we don't trade congestion, right? Because our accounts aren't. We can't put 10 here and it comes down, put 10 more and it breaks that up here, put 50 or 70 or whatever they're doing, whatever their size. But they can withstand a lot of losses because they're going to have account distribution that's super heavy on the side that has a 95% probability to expand. Now, I want to do this. Right up, here we go. Here's another one, right? Innovator. It's a wide reset. Okay, this happens lunchtime or so in East Coast US. And so, pivot retag. We've got this edge and this edge. We've got it defined. This is our perfect trading scenario. It breaks out, comes up, we're close to overvalued. The early majority are going to add, innovators add early majority. This is where we're going to trade. Tends to be better. Now, this is pretty typical market action. Early majority, late majority, laggards, and they get punished. We have indications that they're going to get punished right here. And if that's the general process of what the market's going to look like, and then you start to see tons of order flow reversing, trapping the laggards, then you can expect this kind of movement in your future. That's up to you. Now, if I were trying now, there are people that are looking at this and go, yeah, that's cool. I'm a good enough trader that I can use that. You can go, oh, I can't, I'm not a good enough trader, but I think I can become. I'm not trying to sell you anything or sell you on anything. If you look at this and go, wow, this looks pretty good. Then it will be for you. If I was trying to impress you, I would do this. Here we have our defined encompass pattern, and we break out, right? We have this big wick. We'll teach you what that means. That's where this comes. It's just telling us everything about this is going to get taken out. This is going to get taken out. We just explode. Okay. So that's what we do. And you can apply that any way you want. So let's get back here. Science behind market expansion, signals that might enter, innovators, early adapters, early majority, late majority, and laggards. Okay. We want you to be an early majority because that's where the fun is. So come join us on the 9th. 4 o'clock, there'll be a registration link attached to this mailer. And we'll teach you specifically how we do this. So on behalf of World Cup trading champion Rob Mitchell and the growing number of master traders in our room, We wish you happy trading.